Hi everybody, it is JJ Bolt to the Bust here. It's Monday, November 9th, 2020. The word I'm seeing thrown around the most out there in the financial world is uncertainty. How do we prepare for a new administration? What types of new laws, regulations, changes to the tax code? How do we prepare for this? Well, I don't think there's going to be many underlying structural changes. I think there'll be some changes to the tax code. They're talking about corporations will have to pay more taxes. We'll see what that does to the job market. Of course, we're going to follow all these numbers as they transition. But uncertainty is the big word. Now, on this channel, we try to be balanced. We try to prepare for both outcomes, both scenarios. And I think we might see a combination of two things. Maybe deflation in some areas, maybe inflation in other areas. Take a look at some of the commercial real estate prices plunging, even though we've got stimulus galore coming out of the banking system into the economy, flooding the economy. Unfortunately, it's flooding the markets in Wall Street. The stimulus is not flooding into the people. Okay, we saw industries being bailed out. We see the Fed bumping up their balance sheet, triple now of what it was bumped up in the 2007-2008 financial crisis. But again, it's not going to the people. Loans are giving out to people. People are taking on more debt, with the exception of credit card debt. We had credit card companies actually cutting lines of credit back at the beginning of the lockdown recession. But now credit card companies are starting to give out more balance transfer offers. They're increasing lines of credit in some cases as we see kind of this fake economic recovery. Why do I say fake recovery? Well, let's take a look at some charts here. Recent update right here, the labor force participation rate, it hit about 63.5 at the beginning of the year before the lockdown recession, dropped all the way down near 60, now we're at 61.5. Right, so it went from 63.5 down to nearly 60, and now we're only back up to 61 point, I'll give it 61.75 looking at the chart. So when people talk about a V-shaped recovery, this is less than half of the drop. The recovery is less than half of the total drop. That's not a V. All right, a V would see this side going back up like that. That's not what we're seeing. This is less than half of what it dropped. Right? So the labor force obviously is not recovering. All right? Now, the problem is, and we've discussed this many times, the unemployment number is cherry-picked. They no longer count these individuals that are out of the labor force or that no longer qualify for unemployment benefits. They're considered out of the labor force when that happens. And remember, a lot of people started filing back in March, so we're past the 6-month point. And this has been documented in a few different articles. And there are news outlets reporting on this, but they're not connecting the dots. Connecting the dots would tell you the truth, that the real unemployment number doesn't include the long-term unemployed. But we see long-term unemployment. It's being discussed here out of CNBC. Long-term unemployment is ballooning. Yeah, these people are no longer going to be counted as an unemployed statistic, sadly. Right, dramatic surge in percentage of long-term unemployed. That's because these 6-month benefits are running out. And there's other benefits that are going to be running out at the end of the year unless something else happens, unless there's more extensions, which is possible. But right now there's a lot of forgiveness programs, moratoriums on mortgages, rents, payment delays, enhanced unemployment that's going to run out at the end of the year. So I expect most of these programs, maybe all of these programs, to be extended. Another article right here, NBC, latest jobs report shows long-term unemployment still on the rise, worrying economists. The number of unemployed Americans who've been jobless for 26 weeks, there's the number. At 6 months, it's been more than 6 months now since the lockdown recession began. People are running out of unemployment. So it's about to get really ugly unless something huge happens. It says here the number of unemployed Americans who have been jobless for more than 26 weeks jumped to 3.6 million in October up from 2.4 million the month before. So in 1 month, over a 1 million increase of long-term unemployed people. So from month to month, we're seeing millions of people now no longer being counted, officially accounted as unemployed. So this is a huge flawed mechanism or system as to calculating unemployment. So as the months progress, they're going to try to tell you that the economy is recovering. Look at the unemployment number. Maybe it'll get back down to 6, 5, 4%. But in the meantime, the labor force participation rate is going to show you the real number. So don't be fooled. And I know that most of you watching will not be fooled. All right, a lot of you guys understand this better than I do. The markets are up big. So all of this talk over the past 4 years about how the president's policies were pushing the stock market up, well, we know that was false, because looks like the White House is going to be flipped, but yet the markets are still up. So was it really about the president, or was it more about market propping, stimulus, Fed puts, all right, debt purchases into the stratosphere? I've got the Dow Jones up over 1,000 points. Even during these times of hyper uncertainty, markets still up big. Okay, now let's take a look at gold and silver. Took a big hit today. Silver down to $24.15. Gold an $88 drop as of right now, down 4.5%. Oil up big, up almost $3.50, over 9% gain in oil. All right, folks, these are just numbers on a screen. Continue to prepare in the real world, real life preparation. Food, water, this is what I'm doing. I'm not saying you should do this. Have cash out of the banking system. Have cash in general to be able to take advantage of any buying opportunities that come out there. Prepare yourself on the other side for inflation. I recommend precious metals. Link down below, SD Bullion, if you want to help out the channel and also help prepare yourself. When I see these big price dips, I go in and buy more. I don't get scared away. Remember, be greedy when others are fearful. All right, you want to be on the buying side when no one else is buying, when people are selling. You want to be on the sell side at the peak of the bubble. And I think gold and silver eventually are going to go into a bubble, kind of like the stock market and the real estate market are in a bubble right now. All right, same thing with stocks. If you're in stocks and you've realized some gains, or you're seeing gains on paper, you need to realize those gains and cash out and get some hard assets. At least that's what I would do. I'm not giving advice. But thanks everybody for watching. Stay well, stay safe, stay prepared. And keep your head above water financially by coming back to this channel for more reports. Bye now.